Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, we're talking about why Tesla stock is headed to Mars. By the way, as always, link in the description if you'd like to pick up your own Tesla stock to Mars merch, hoodies, shirts, mugs, etc. So they say a picture is worth 1,000 words. I think when it comes to stocks and investing, sometimes a chart can be worth 1,000,000 words. So in today's video, we're going to look through some updated charts from one of the Tesla community's most valuable assets, James Stevenson. So with that said, let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it. All right, let's head over to Twitter. Of course, there's a link in the description to the full tweet storm. I highly recommend you guys and girls take the time to look through all of James's tweets, but I know most of you are lazy motherfuckers, so I'm here to go through some of what I think are the highlights. First chart we're looking at here, Tesla's production ramp and profitability. We've got historical data here running up all the way to Q2 2021, the most recent available data, and also some predictions for Q3 and Q4 from James. There's a lot of nuance here, a couple of things that I want to point out over time. If we pay attention just to revenue in green compared to Tesla's variable costs, there was periods of time where these were very tight, very close together, but we're starting to see a separation. The more vehicles Tesla produces, the higher their costs are. Obviously, there's more parts, more labor, blah, blah, blah. But we're starting to see this separation, and this is the very early stages of Tesla's insane operating leverage coming into play. This is something that I think most stock investors and practically all of the Wall Street stock analysts are completely overlooking. In the coming quarters, and especially the next few years, we're going to see a huge separation between Tesla's revenue and their variable costs. This is one of my favorite charts of the entire tweet storm by miles. We're looking at Tesla's quarterly revenue in millions from their inception right up to the present moment. Each of these colored bars is representing quarterly revenue, and we can see the totals for each year. 2009, 73 million in revenue. Jump forward a little bit to 2012, almost $420 million in revenue. You guys can notice a little bit of a trend happening over time, increasing quarterly revenue quarter after quarter every single year on average, huge leaps and bounds. And something very interesting to pay attention to here, starting in 2017, Q1 and Q2 of 2017, the cumulative revenue from those 2 quarters bigger than the first 3 quarters of 2016. We don't see that same pattern happen again until all the way in 2021. This is really worth taking a moment to let sink in. The first 2 quarters of 2021 comprise more total revenue than the first 3 quarters of 2020. The first 2 quarters of revenue in 2021, more revenue than the entire year of 2018. Even more stunning than that, the first 2 quarters of 2021, almost as much revenue as the entire year of 2019. 2021 Q1 revenue alone, greater than Tesla's entire revenue in 2016. This trend visually illustrates this stunning rate of quarterly growth that Tesla is showing in total revenue. I cannot think of another company on earth that's growing at this rate that's already at this scale. I mean, this is absolutely stunning. The first 2 quarters of 2021, 3 times their 2016 revenue. I mean, this is just madness. And there's no end in sight. Remember, we've got Berlin and Austin set to both begin production later this year. That's right, this year, 2021. As those continue to scale up, Tesla is going to more than double their total production capacity in a relatively short period of time. Take the time to pause and examine this graphic in detail. It's just mind-blowing. If you guys want to play along with me at home, just visually try to picture just the Q1 data, okay? Just pay attention to the Q1 and the growth curve here. Look at this. It's absolutely bananas. Next, we have Tesla's global vehicle deliveries by quarter, broken down by vehicle model. We can see the S in red and the X making up an incremental, just tiny amount of Tesla's total vehicles. Honestly, if Tesla literally stopped producing these products, it would barely make a difference to the company. We can see the Model 3 in grey making a huge impact, and now with the ramping of the Model Y, we're starting to see the Model Y volumes ramp quite substantially. Remember, over time, Model Y is going to be selling considerably more units than all of other Tesla's vehicles combined. So we're still in early days just of seeing the Model Y ramp. And again, just imagine what this chart looks like when you stack a Cybertruck on top of it, and then a $25,000 Tesla, and then a Tesla van, so on and so on and so on. It's still early days, but we can see the trend here quite clearly. Every new vehicle model Tesla adds, you can stack another color on top of this chart. This is another fascinating chart here showing the Model 3 and Model Y deliveries over time, plus the last 2 quarters of 2021, including James's estimates. We can see the introduction of the Model Y, an extremely smooth, steady, and rapid ramp. Model 3 volumes are a little bit all over the place, quite lumpy as we can see here, but Model Y, just a steady, consistent, rapid increase in total volumes all the way to Q2 2021, and getting close to reaching parity with Model 3 deliveries. As I said earlier, no end in sight. Model Y volumes are going to well exceed Model 3 quarterly deliveries very soon, and we can see how steadily and seamlessly Tesla is capable of ramping this vehicle. Oh, and by the way, you know the first vehicle that's going to be coming out of Berlin? Yeah, Model Y. You know the first vehicle that's going to be coming out of Austin? Yep, that's right, Model Y, both of these factories to begin production later this year. Here we're looking at Tesla's quarterly production and deliveries, actuals through to Q2 2021, and then forecasts from James. This is where we are today. Tesla's annualized rate of production, a little bit over 800,000 vehicles per year. If we skip forward just 1 year, Tesla will be on track for an annualized rate of production at well in excess of 1 million vehicles per year. And if we skip ahead another year, so 2 years from where we are today, James predicting Tesla's annualized rate of production and deliveries to be well in excess of 2 million vehicles per year. And James and I are very much in line with our production and delivery estimates for Tesla. My bear case has Tesla delivering just under 2 million vehicles for the full year 2023. My base case around 2.2 million, and my bull case around 2.5 million. This chart shows Tesla's adjusted EBITDA, including up to Q2 2021 and estimates for the final 2 quarters of this year. Let me ask you guys a question. Can anyone notice a trend here? Spoiler alert, it's going up. This means over time, quarter after quarter, Tesla is going to be putting more money in the bank every quarter. I've discussed recently that I think Tesla's going to reach a stage by mid to late decade where they will not be able to spend their money. They're going to have so many billions of dollars piling up every single quarter, they will have no choice but to start paying out dividends. I've thought about all the possible ways they could spend the money, including building some ridiculously large supercomputers for neural network training, even building their own vehicles and making robo-taxis that they don't even sell to customers but keep in their own fleet, and I still don't see any other way. If we look at the sharp trend starting in Q1 2019, this thing is literally headed to the moon and then to Mars. James's estimates here suggesting Tesla will have around $3 billion of EBITDA per quarter by the end of this year. And yeah, that's before Austin and Berlin have fully ramped. This is one of the most important sets of charts James has put together here. We're looking at Tesla's trailing 12-month. First here over on the top left, Tesla's gross profit. Now, again, I ask you guys a question. Do you notice a trend? Spoiler alert, this is called an exponential growth curve. Tesla's gross profit in billions of dollars increasing exponentially. And again, I remind you, this is before Berlin or the Austin Gigafactory have even begun production. Another way to look at this is Tesla's trailing 12-month in terms of adjusted EBITDA. And again, the trend is very clear. Tesla's non-GAAP trailing 12-month earnings, again, the trend very evident. Finally, Tesla's GAAP earnings over the trailing 12 months. As I said earlier in this video, a picture is worth 1,000 words, a chart is worth 1,000,000 words. Now, if you guys and girls happen to know anybody who currently resides in their mum's basement and also happens to be short Tesla stock, this would be a great set of charts to send to just ask them the question, do they notice a trend in these charts? Take a moment to just let this sink in. Look at the trend. All 4 of these charts paint the exact same picture. Tesla, currently a money printing machine, and their profits growing exponentially over time. Now this chart is equal parts hilarious, savage, and just plain embarrassing. We're looking at Tesla's quarterly regulatory credits revenue. As we can see, this is money that other automotive manufacturers are paying to Tesla to literally put them out of business. Tesla is putting this money towards building factories and accelerating their mission. They talked about this in their recent impact report. Imagine if you are an automaker right now and you're one of the clowns, one of the Muppets, who didn't accelerate your own plans to build your own EVs fast enough, and you are now forced to pay Tesla hundreds of millions, potentially billions of dollars per year to avoid enormous fines because you couldn't get your shit together. Tesla then takes that money, uses that money to build new products, to invest in R&D, to sell electric vehicles that are eating your own lunch and ultimately putting you out of business. Now, if we look at the overall trend here, we actually see quite a strong increase in regulatory credit growth. James estimating in the next 2 quarters, there's going to be quite a reduction here. This is really hard to know. It's very much dependent on how quickly other automakers can actually ramp up their EV production to avoid these enormous fines. In my opinion, at some point in the relatively near, maybe medium term, Tesla will no longer be receiving any revenue in the form of regulatory credit sales. But this is really dependent on how quickly automakers can actually ramp their own EV programs. If they have unexpected delays, problems, etc., who knows how long this revenue can last. But in either case, this is so embarrassing for automotive manufacturers who are paying Tesla to put them out of business. What else is there to say? This next chart is super interesting. We're looking at Tesla's non-GAAP earnings per delivery, as in vehicle delivery, over the trailing 12 months. We're at around 5,500 vehicles per day. Again, look at the trend. Just a few quarters ago, practically nothing. We're seeing very strong growth here. A few of you might be wondering, what the hell is going on here? How is this close to $9,000 per vehicle in just a few quarters' time? As per James's notes here, this includes an estimated $2 billion in deferred tax benefits from prior year's losses. A lot of Tesla investors who don't really get down in the weeds may not realize this, but Tesla are sitting on around $2 billion of deferred tax benefits. In other words, Tesla effectively has a magic lever. This comes down to a little bit of accounting magic. The long story short is, at Tesla's discretion, in any future quarter they choose, they can recognize these tax benefits, and suddenly they're going to see enormous additional profits for those ensuing quarters. James is estimating Tesla to pull that lever around Q4 2021 and throughout the first 3 quarters of 2022. In either case, there's like zero analysts on Wall Street who are expecting this. Honestly, like the first quarter that Tesla recognizes some of these deferred tax benefits, everyone on Wall Street is going to go, what the f just happened? Then they'll do some digging and realize what happened. I personally think that the stock market is going to completely lose its fucking mind. This is like a rocket that's about to launch and nobody realizes it's around the corner. The stock market is not expecting this. Wall Street stock analysts are not expecting this. In fact, there's very few people that even realize this is around the corner. The question I ask you guys and girls is, what do you think is going to happen to Tesla stock the first quarter they decide to recognize some of this deferred tax revenue and have an astonishingly profitable quarter that blows away all expectations? Bit of food for thought. And I've saved the best till last. I'm going to quote James's tweet here. Here's a chart illustrating a point Zach made on the most recent earnings call. Tesla has been improving gross margins even while the average selling price of vehicles has been falling. And the reason for the average selling price falling, it's because the sales mix has shifted to more affordable Model 3 and Model Y. Let's look at this visually. This only includes historical data, no estimates here whatsoever. In grey here, we can see the average selling price of Tesla vehicles going back to Q1 2018, obviously falling over time. There's a lot of Model S and X plus the high trim Model 3. Starting in Q2 2020, we can see a very sharp trend, big increase in Tesla's gross margin, excluding regulatory credits, per vehicle as a percent of revenue. At the same time, we can see the average selling price falling on these vehicles. It's really important to take the time to understand what's going on here. People are spending less money per Tesla vehicle sold. They're buying the cheaper variants, the Standard Range Plus rather than Performance or Long Range. Yet at the same time, because of Tesla's incredible innovation, operating leverage, new manufacturing techniques and technologies, etc., Tesla is still managing to increase the margins on the vehicles sold. I personally believe that over the long term, Tesla's gross margins per vehicle will well and truly exceed 30%. I also believe that Tesla's average selling price on vehicles is going to plummet over the next 5 to 10 years. First of all, with the introduction of the much higher volume $25,000 Tesla, and in the second half of this decade, I expect Tesla will release another generation vehicle priced at around $18,000. This, of course, is going to dramatically decrease the average selling price. This is going to be a vehicle that sells many millions of units per year at a much lower price. But we know that Tesla continues to find new ways to do more with less. We're seeing the gigantic gigacasting, the gigapress, deleting hundreds of parts and processes, which means as Tesla drives the cost of their vehicles down, their margins can still increase. And we're seeing early signs of this today. And yeah, this is before the software revenue floodgates open, especially as Tesla solves autonomy. So I hope you guys have enjoyed this video. I really do recommend you guys check the link in the description and read the entire tweet storm. As I said, a picture is worth 1,000 words. When it comes to Tesla stock, these charts are worth 1,000,000 words a piece. A big shout out to James Stevenson for putting them together. And by the way, if you're not following James on Twitter, what are you doing? James puts together some great charts, and he also has an uncanny memory for remembering extremely dumb shit that extremely dumb people have said in the past about Tesla. Let me know if you guys enjoyed this video in the comments below, and also, what was your favorite chart? Which of the charts we saw today do you think best represents where Tesla and Tesla stock are headed to in the coming months and years, aka the moon and then Mars? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.